IVM.
Hey everybody, we'd like to welcome a new sponsor, Storytel. Storytel is an audiobook streaming services for mobile and tablets. If you haven't heard audiobooks before and you're a podcast listener, audiobooks are probably right up your alley. You can enjoy your favorite titles when you travel, exercise, or cook. There are great books over here, like the Percy Jackson series is available if you want like some new fantasy, or if you want to go for something old school or classic. You can get either Bram Stoker's Dracula, or you could get Edgar Rice Burroughs' John Carter series. Download Storytel today from the app or Play Store and enjoy a free 14-day trial. That's Storytel, Storytel. Storytel from the App Store or Play Store. Download today.
This is a special edition of Paisa Vaisa featuring Mr. Anugrah Shrivastava of SmallCase. In the first part of this series, Anugrah talks to Anupam about how he got into thematic investing and what SmallCase does to make investing easier for their customers.
Folks, welcome to Paisa Vaisa. I'm your host Anupam Gupta, B50 on Twitter. Now, I'm sure there are a lot of you out there who've thought of great ideas to invest in. For example, many years ago, I had gone to a mall where the Big Bazaar sale was going on. Now, in those days, there was no Amazon, there was no Flipkart, and the line for that sale was really huge. So I thought maybe Pantaloon, which was the owner of Big Bazaar at that point of time, might be a good stock to invest in. And I bought the stock, and what do you know? I got lucky with that. So there are two ways to invest in stocks, as we all know. There is mutual funds, and then there is investing in stocks directly. How do you choose between the two? What if you were convinced about an idea and you wanted to buy stocks directly and didn't want to go through mutual funds? Well, today's guest is a startup that operates in this area of thematic investments, and they will help you to choose a theme or to have an idea to invest in and hold your hand through the entire process. I'm very happy to have with me Anugrah Shrivastava of SmallCase. SmallCase is a startup in thematic investments. Here we go. So Anugrah, welcome to the show. Why don't you start? Just give us your background, your education, your career, how you thought of SmallCase, and let's start from there.
Thanks a lot, Anupam, for having me. Really excited about this.
Sure.
So I'll start with just a little bit of background about myself. So, like most Indian students, I was also kind of forced to take Maths plus Science in my plus 2 and prepare for IIT JEE. I was a little fortunate enough to land a seat at IIT Kharagpur, from where I completed my master's in economics.
Mm-hmm.
As you know, that economics and finance sort of go hand in hand.
Yes.
And I started building interest in finance as such during my college days.
Mm-hmm.
And to pursue the same, I registered for CFA and was able to finish the course by the time I graduated from the college. And directly after the graduation, I joined Nomura.
Okay.
It's one of the largest one of the largest Japanese investment bank.
Mm.
So I was looking at Delta 1 equity strategies for around 2.5 years at Nomura. By Delta 1, I mean single stocks and futures. And this was the time when I was actually building quantitative investment solutions as well as thematic strategies for institutional clients.
Mm-hmm.
Now, what do I mean by thematic strategies was like ideas, for example, like which sort of mining stocks, Australian mining stocks might benefit if Japan introduces a bill to restart nuclear power plants.
Mm-hmm.
Or, for example, if yen is depreciating, then creating a basket or an index of Japanese exporters. So these sort of thematic ideas for institutional clients. And during this time, I actually built I built the in-depth knowledge of how to go about creating thematic and index products.
Okay.
In later part of my career at Nomura, I was the trader for exotic derivative products in the Indian markets. I was taking care of the complete structured products business, equity structured product business of Nomura in India.
Mm-hmm.
And then, I guess in late 2015, I got a call from Vasant, who is my co-founder and junior from college.
Okay.
He told me that he has quit his job and is looking to start something in the consumer internet space.
Mm-hmm.
And I told him that I've been working on thematic investments and how I feel this is far, far better, or would work far, far better for retail investors compared to institutional clients. And that's when we decided to pursue the idea of SmallCase.
Fantastic. So this is probably a good time for you to tell us what exactly is SmallCase, what's the idea behind that, and what's the offering to consumers. Because when I look at your background, you've been working, you've worked with Nomura, and that's essentially institutional stuff, what we call B2B, business to business. And here you're dealing with people, which is more of retail. So tell us about the product. Just explain to us what exactly is SmallCase.
Sure. So, probably I would break your question. First, I would try to answer why there is a need for such a product, and then get into what exactly is the product.
Okay.
So, as you are aware, any retail investor who's trying to access equities market in India currently has two options.
Yes.
They can either go and buy into mutual funds, equity mutual funds, or they can directly buy shares through any broker.
Yes.
Right. Now, we feel that both are very suboptimal options to access capital markets.
Okay.
Now, let's look at both of them one by one. If you look at mutual funds, so traditionally mutual funds in India have been sort of a push product. Right? Instead of being a pull product, there's always some advisor coming to your house and trying to sell you some product. Probably he's your long-time family advisor or someone from a new bank where you have just opened an account.
Yes.
Right. And there's always an expense ratio attached with the mutual fund.
Yes.
And you have spoken a lot about it in your previous podcast also, right? How the expense ratio works and everything. Right? So on an average, as you are aware, the expense ratio on mutual funds in India is around 1.5%.
And this is even for direct.
Even for direct, it would be more than 1%. For regular, it might be more than 1.5% also. So on an average, you can assume that for mutual funds, it's around 1.5%. Because still majority of the people are taking the regular route, not the direct route. So, let's say if you're investing for 30 years and, as you previously discussed, that if you can take 8% return generated by equities asset class in general, and that's what you're able to realize in mutual funds also. And if you invest 100 rupees, you'll have something more than 1,000 rupees at the end of 30 years. Okay. Now, if you incorporate the expense ratio into account, that is 1.5% out every year, you might end up somewhere around 660 rupees instead of 1,000.
Wow.
Even if you assume that is 700 rupees, so that's like almost a reduction of 30% of the total corpus that you can receive at the end of 30 years. Now, this is just an example if you're investing 100 rupees. Now, suppose you're investing 1,000 rupees, you will end up having 30,000 rupees less. If you are investing 1 lakh rupees, you'll end up having like 3 lakh rupees less.
Yes.
And the whole game keeps on increasing, right? As you keep on investing more. So mutual funds, it's been established time and again, it's a very costly affair for the retail investors. And the second problem with the mutual funds compared to single stocks and other products is that they are kind of illiquid. Right? There's only just one end of day NAV value populated, right? There's no instant get into it or instant get out of it sort of thing. Which you can actually do with ETFs or single stocks. And on top of it, these are sort of black box. Like you don't know what's happening inside. You have no control over it. You don't get to know what is the current holding of the mutual fund. Obviously, there are regulations which binds them to release their current holdings at the end of every month. But at any point of time, you don't know what the mutual fund is holding or what you are actually invested into. Right? And to top it all, they are non-relatable. Like, for example, if there's an advisor who's selling a mutual fund, he'll come and say, okay, so buy into HDFC Top 200 fund or probably some ABC Bank arbitrage fund. But the person sitting on the other side of the table, that is the retail investor, has no idea in the first place, like what does he mean by Top 200? What does he mean by arbitrage? What sort of fund he is getting into, right? So there are a lot of problems with mutual funds. That is, they are non-relatable, they're sort of illiquid and very expensive affairs. Now, let's look at the other side. That is the single stock investing. Okay. Now, the biggest problem with single stock investing is the retail investors don't have the sufficient bandwidth and time to do the enough research which is required to get into single stocks. So, and at the same time, the risk increases a lot because then there is company-specific risk and a lot of other risk that comes along with single stock investing. So both these ways are sort of suboptimal. So we thought of why don't we introduce something in the middle of this which can take best of both the worlds, right? And that's when we thought of introducing a SmallCase.
Okay.
Now, what is a SmallCase? A SmallCase is a portfolio or basket of up to 20 stocks attached to a particular theme. For example, on our platform, you'll find like a lineup of more than 60 plus small cases. A GST small case would represent a basket of, let's say, 10 to 15 stocks, which which are expected to benefit due to GST implementation. There will be a rising rural demand in small case, which will consist of stocks which are expected to do well if the rural consumption increases. Okay. There's a smart city small case, which consists of stocks, basically, which are expected to perform well as and when government keeps on pumping money to build more and more smart cities.
Okay.
Because these might be the companies who will get contracts when these cities are rebuilt. Right. So this is the idea of a small case, that a portfolio of stocks attached to a particular theme. Now, how does it solve all the problems that were discussed? Right. The most difficult problem that it solves is that the product suddenly becomes very relatable. Okay. So, for example, a retail investor, the first thing which draws him to invest into equities market would probably be something like his friend telling him, okay, I have invested into that particular stock, or I think the Modi government has announced a smart city project. It might be good for the economy in general. Or he reads into a newspaper that GST has been introduced. It is expected to change the economy in a certain manner.
Okay.
Right? So these are the sort of things that he's reading on a daily basis. He's observing in and out around him. Okay. And when he invests into these things, the product sort of becomes easily relatable. He's able to align his philosophy with his investments. That is, I think that GST is good for the economy. That's why I'm investing into it. I feel that because of so-and-so policies, or because as and when India grows, rural consumption will increase. That is why I'm investing into a rising rural demand in small case. So the product suddenly becomes very relatable. Now, at the same time, the product is very liquid also, because at the end of the day, it's a basket of stocks, and you can buy and exit at any point of time during the market hours. And it's completely transparent. The stocks come to your Demat account. So at any given point of time, you have full control in terms of what you are holding and what is the current composition of your portfolio. And the biggest advantage is that it is super cost efficient compared to mutual funds. That is, you just pay 100 rupees irrespective of the amount that you are investing into a small case when you are buying. For example, let's say you invest 10,000 rupees in a particular small case. So you pay a small case fee of 100 rupees.
Okay.
Now, next time when you come and invest more in this small case, it's completely free of cost. If you are rebalancing the small case, it's again free of cost.
Okay.
If you are exiting from a small case, it's again free of cost. So in terms of cost that you are paying to the platform is just 100 rupees, irrespective of the amount that you are transacting.
Okay.
So the product is much more relatable, liquid, and cost efficient.
Okay. Folks, let me just break that down for you, okay? Let's say, you're new to investing and all you've heard so far is mutual funds. Nothing good or bad about it, but the way that a mutual fund operates and how Anugrah just told us is that you give your money to a fund manager, and that fund manager takes a decision to invest your money into buying certain stocks, okay? Which is why you have the concept of a mutual fund. That is pooling in of money and a professional with a research team making all the decisions of what's a good stock to buy, etc., etc. Now, as Anugrah just told us, there are a few things, a few features about mutual funds which you also should know. What he just mentioned was the expense ratio, for example. That is the cost that the mutual fund company bears for buying and selling those stocks. It could be the brokerage, it could be the mutual fund manager's salary, whatever it is. Even for a direct investment. Now, if for those of you who've heard our episodes with Kunal Bajaj of Clear Funds or with Amol Joshi, who's a financial planner, know that mutual funds have a certain cost to it. There is a regular mutual fund which you buy through a distributor or through an advisor, which has a slightly higher cost, and one where you buy directly from the mutual fund and which has a lower cost. So what Anugrah just told us was even the lower cost one is still coming up to about 1.5, 1.6%. And therefore, if you're investing for 30 years, that entire amount could add up meaningfully. It could take away a lot from the profit that you make. So that's one thing that you need to think about. The second, what he told us was, mutual funds aren't exactly transparent. You don't really know what stocks the mutual fund is buying and selling on a daily basis. Sure, they give you fact sheets so that at the end of the month, you know what are the holdings that the mutual fund has done. But there's really not anything much beyond that. And the third point that he told us was liquidity, which is that, you just have an end of the day NAV, which doesn't move up and down like stock prices do. So that's the thing about mutual funds. On the other hand, you've got stocks directly. Let's say that you're someone who's savvy or someone who's also starting off and who has a general idea about what stocks are and what he wants to buy. So SmallCase offers you that. They said, okay, here's an idea, here's a theme, and they generate the stocks which each theme has. And we're going to ask Anugrah exactly about how this works. So Anugrah, tell us about that. How exactly does this choosing of stocks work? Because from what you told me is, you spoke about GST, and there are so many themes in India. There could be affordable housing, there could be consumers, there could be, I just want to buy blue chips, or I just want to buy companies that give me fantastic dividend yield, or I just want to buy, say small cabinet. And, so at any given point of time, I'm sure you'd know there are lots and lots of themes. So if I come to your website or your app and I say, okay, help me choose a basket. So how does the back-end process work out here? Tell us about that.
Sure. So, as you mentioned that in a growing economy like India, there's always more than 50 to 100 themes working at any given point of time, which are long-term in nature. And all the themes that you mentioned, like affordable housing, dividend yield stocks, and probably like all the other government reforms that are coming in, all these themes are available on our platform. Now, let me first tell you how a particular theme is built, or how do we pick stocks for that particular theme. So, it's a very comprehensive process where we have an in-house research team. Okay, and how it works is that, let's take an example to understand the same. Let's say I'm building a GST SmallCase.
Okay.
So how will I go about it? Okay. So I will start with the full universe. That is all the stocks listed on the National Stock Exchange of India is my universe, and I'm going to consider all of them in order to build this GST SmallCase. Okay. The next step would be that the research team will start reading and identifying what sort of trends or market dynamics would be working if GST gets implemented.
Okay.
Let's say they identify three things. The first is that organized players in unorganized segments would be benefited.
Okay.
As GST gets implemented. Okay. The second would be, in general, logistics players would be benefited because there will be a lot of logistic improvements and things like that.
Okay.
And third would be, let's say wherever the GST tax slab is coming down and company is able to take is able to grab some part of the profit.
Okay.
So these are the three things that the research team identifies. Okay. Then we have our in-house sector classification where I just need to put in these things, okay, and identify which stocks belong to these things. So all the stocks belonging to logistics sectors will come into it. Okay, let's say I have identified that plastics, paints, and some other such sectors have few organized listed players with very high unorganized segment. Okay, so these becomes my next set of sectors. Okay, and I have identified a few more sectors where tax rate is going down.
Okay,
so I plug into these sectors into our algorithm and identify the next set of stocks which we are going to consider for further steps.
Okay.
So the first step was defining the universe. Second step was research team doing all the analysis to identify which sectors will be benefited from a particular theme. Okay. Now the next step is to put in some liquidity filters. Okay. Now, when we are building these portfolios for retail investors, obviously the liquidity filters will be a little relaxed compared to what we put for like corporate clients.
Okay.
But we need to ensure that whatever we are offering to retail investors is liquid enough so that even if there are lakhs of retail investors coming onto the platform at any given point of time, there's sufficient liquidity into the stocks.
Okay.
So we have some in-house liquidity filters which we put to identify the liquid stocks from the sectors that we have selected.
Okay.
So this becomes the third step. Now the fourth step is to put in some other Indian market specific checks like promoter holdings or pledged promoter holdings to avoid stocks which are susceptible to sudden falls.
Sure.
Okay. This becomes the fourth step.
Okay.
And the fifth step is our proprietary engine, which basically now selects the stocks. Okay. Now this takes care of a lot of things like what is the valuation, what is the market share growth, what is the earnings quality, earnings growth, profitability, and all the other things.
Okay.
So there is a algorithm which is built in-house. So it considers all these things and finally give us a selection of 10 to 15 stocks which fit into the theme.
Okay.
Okay. So I'll just recap the whole process quickly. First was to define the universe. Second was research team identifying the sectors. Third was putting in some liquidity filters to ensure the stocks are liquid. Fourth was some Indian market specific filters like promoter holding, pledges, and etc. And the last step was to basically pass all of these stocks through our prop engine to select 10 to 15 stocks which fit into a particular theme.
Okay.
Now the next step is to identify which weighing scheme should go with the theme.
Okay.
So as you know that every index or a basket or a portfolio has a certain weighting scheme.
Okay.
Right? It could be equal weighted, it could be market cap weighted, it could be revenue weighted, it could be risk weighted. Okay.
Yes.
And like just changing the weighing scheme can change your returns by a lot.
Correct.
Okay. So just for an example, like if you look at Nifty, right? Nifty is a market cap index.
Yes.
Okay. Now, if you look at, if you compare this market cap index with an equal weighted index, you would see that an equal weighted index always outperforms the market cap index.
Okay.
In case of Nifty. Right? So selecting the right weighing scheme is also very, very important. So we try out different weighing schemes, see historically which weighing scheme has worked very well, and then finally fix a weighing scheme for the small case.
Okay.
So that's the full process of building the small case. Now, once the small case is built, every small case gets rebalanced on a quarterly basis.
Okay.
The way every index like a Nifty or MSCI India gets rebalanced on a semi-annual or quarterly basis, every small case also gets rebalanced on a quarterly basis.
Okay.
That is, we rerun the whole process and identify which are the current set of stocks which fulfill all the criteria. Okay, so that at any given point of time, investors always remain true to the theme.
Okay. Folks, let me just add in there. Okay. We spoke about the GST theme. We said that it will benefit companies that are organized players in unorganized space. Okay. And I can give you plenty of examples. There are tiles, there are pipes, there are ceramics, there are paints. So we will, let's assume that these companies will benefit from GST, because as business goes from the unorganized sector to the organized sector, these companies will see higher revenues, and therefore SmallCase chooses a list of these stocks. What they do is then they have lots and lots of filters, which are the really good companies and where the promoter holding is good. And Anugrah mentioned about liquidity. Liquidity is essentially that you need to have enough stock of the company in the market. That's what liquidity really means. That when you buy or sell a stock, you shouldn't have very big variations in price. Okay, so that's a function of liquidity. So after the internal processes, they arrive at say 5 stocks or 10 stocks, and then you've got to choose how much money to invest in each stock. So they do all of that decision making for you, and then you just put your money into buying that small case and you're done. So Anugrah, we're going to wrap this session, this segment here. Okay, and in the next segment, we're going to be talking about a real life case study. We're going to be talking about if we can do SIPs in small case. And we're going to talk about something funky that you guys have, which is called the Market Mood Index. Okay, so... Sure.
So just before we wrap it up, I think you summarized very well.
Thank
you.
So
essentially what we are doing is taking care of all the hard work that the investor needs to do and offering them a relatable product at a very efficient cost, which they can buy in just 2 clicks.
Sure.
So buying a small case is actually a lot easier compared to buying a stock. The conventional brokers.
That's interesting, and that's a valid point, right? Because if I were to call a broker and then sit and negotiate him with the price, what's a good price to buy, good price to sell, or even choosing which are the good stocks to buy, that does take a lot of my time as someone who's not very clued into the stock market. So small case does step in there and do all that thinking for me. So fantastic, Anugrah. Just thank you so much for the first part. We're going to be doing the second part pretty soon. So stay tuned, listeners. Thank you.
Thank you for listening. If you have any money-related questions, you can tweet to us at IVM Podcasts or email us at paisavaisa@indusvox.com.
No material on the show should be considered as financial advice. The material on the show is for informational purposes only. Please consult a financial advisor before taking any investment decision.
As you can see, we have a podcast listener in his natural habitat. Millions of years of evolution have led him to this point. He's on his way to work, and listening to podcasts makes his miserable day better. He will now head to work and use all his knowledge to communicate with other colleagues and possibly future mates. You can find more of his species on ivmpodcasts.com, your one-stop destination where you can check out all the coolest Indian podcasts. Happy listening.